If you are new to ICT concepts or even new to trading, this strategy is by far the easiest strategy you can learn from the ICT arsenal, and it's highly profitable. So without wasting any time, let's get right into the video. These are the few things you need to understand first before I tell you about the strategy. You need to know what is a fair value gap. For those that don't know, it's very simple. It's just a gap between first and third candle. So you can see this low right here, this high right here of the third candle, and this in the middle is the fair value gap. It's very simple. It's everywhere, as you can see. It's here, here. Very simple. This is the bearish fair value gap, and this is bullish one. You need to understand market structure. What is a market structure? It's this right here, as you can see. It's basically telling you where the market is going and if it's bullish, bearish, or if it's reversing. If we are trading down, we can see that the market is breaking the structure. This is break of structure when you get swing low, swing high, and then break of this swing low right here. So break of structure, break of structure, break of structure. And when we reverse, we get market structure shift. So we have swing low, swing high, swing low, and then break of the swing high or higher high. And then the same thing when you go bullish, we keep making new higher highs and breaking the structure. So now we can stay on this chart too for the liquidity. You need to understand liquidity. And in very simple terms, liquidity is basically where the stop losses are and buy stops and limit orders. So imagine you're going short here, right? So where would you put your stop loss? Right above this high, right? Right here. Or some people would put it above this high. So that's the liquidity right here. And if you were long from this position, you would put your stop loss here, right? So that's where our liquidity is. And market is going from liquidity to liquidity. So liquidity taken, liquidity taken, liquidity taken, and then we have this liquidity above. So the market is going back above for this liquidity. And now POI. What does POI mean? It's point of interest. And now I'm talking about higher time frame point of interest. POI can be anything of these things. It can be fair value gap, order block, or liquidity on a higher time frame. And what is higher time frame? It can be anything from 5-minute to 4-hour or daily chart. If you're trading on the 1 minute. So basically anything higher than 1 minute. But if you're trading on 1 minute, I would recommend 5-minute and higher. So this is higher time frame, and we are looking for our point of interest. And that can be the liquidity, which could be this high right here. It's also this low. And if you have equal highs, it's also your point of interest. It can also be a fair value gap somewhere. So if you have a fair value gap here on a higher time frame, it's your point of interest. Okay? And order block too. We did not talk about order blocks in this video, but right now it's not that important because you want to make your trading as simple as possible. The more simple it is, basically the higher win rate it has. So make it simple. So now we know what fair value gap is, market structure, liquidity, and also our point of interest. Now let's get to the strat itself. So this is our higher time frame point of interest. And why? Because we have this higher time frame high, which is also the liquidity. And what we are waiting for is for the price to break into our point of interest. Then we wait for market structure shift. Then we want to see a fair value gap to be formed while breaking our market structure. And we want to enter on this fair value gap and target another point of interest, which can be low or the fair value gap or order blocks, anything. So as you can see, it is very simple. You just wait for entry of higher time frame point of interest, break of the market structure, which is the market structure shift here, which is showing us that we want to reverse and you want to see big break of this. So if you have this swing low right here, you want to see big candle, close below the low, leave a fair value gap behind, then retrace back into the fair value gap, and you want to enter here short like this. Put your stop loss above this high, at least one tick, and target the low. So now let's look at some real examples from the market. So on this example right here, we can see that we break this high right here. This line is a higher time frame high from before. So this is our point of interest. Now we can see that the price reached this high. So now we are looking for the market structure shift. So when looking for the break, you want to look for the swing low break. And swing low is when you have 3 candles and the middle one is the lowest one. So we want to see the break of this low right here. And we can see that we closed right below. We left fair value gap behind. And this would be our entry. But you can see that the price ran without us. And that's completely fine. You cannot catch them all. You could try to enter later, but you're just chasing price. So if this happens, don't worry, you will get so many more trades like this. We can also see that we took these equal lows, which is also our point of interest because there is liquidity below this. So we took that low right here. We made new low. And now we want to see a break of swing high, which would be our market structure shift. So we made low, then we made this swing high, we made new low, and we want to see the break of this swing high. We got the break on this candle. We left a fair value gap behind, very small fair value gap, but that's fine. Any size of fair value gap is valid. Okay. So you want to enter long here. Put your stop loss either below this low right here or last swing low, which would be this right here. So like this. And now what you are targeting is higher time frame liquidity, which would be right here. So this is 5-hour trade. You're risking 2 handles to get 12. Beautiful. Now let's look at last trade. Let's look at replay mode. So you can see how it looks in real time. This right here is how it would look like in real life when you're trading. We are on the 15-minute chart. We can see this high right here, which is our point of interest. You can also look further and we can see this high right here. So that would be also our point of interest. Now we can see that we are breaking through. So let's go to the 1-minute chart. On this one, it did not break yet. So let's go. Okay, so we break through, okay? Now we wait for the market structure shift to happen. So we're waiting. We made this swing low right here. So if this breaks, we are looking for the trade. So we made new swing low. So now we're waiting for this to break. Okay. We made another swing low. So again, we're waiting for this to break. And that's exactly how it works. Okay. So we're just waiting for the swing low to break. Now we got the break. We got a break with a huge candle, which also left fair value gap behind. So it's our fair value gap. Now we go short here. Stop loss. 1 tick above this swing high. And our target is higher time frame liquidity, which could be also on the 3-minute, 5-minute, 15-minute, anything. And you also try to target fair value gaps and something like that. So we see we have huge fair value gap here. We also have an order block here. So this could be our target. So let's go to the 1 minute chart. And you can see this trade has almost 4R. We're risking 4 handles to get 16. So let's see if we get filled. Okay, we got filled. And now we can see the price dropping. It went all the way up again, which is fine. We are still in the trade. And then we get the drop. Now, what I recommend you to do is you should always take profit. What I do is take profit at 5 handles, and then I look for some interest on the chart. So we can see this order block right here on the 1 minute chart. So we can see this order block right here on the 1 minute chart. So that will be also my point of interest, where I would get 10 handles almost. Then we can see that the price tried to reverse. It took those people out that left their stop losses here and then went right for the target. So this strategy is very simple. Thank you guys for watching. If you like the video, leave a like and subscribe. Goodbye.